All right, cool. So after, right, marking up swing highs, swing lows for your entry, we know then to draw the fib. And the fib goes hand in hand with your order blocks. Now, specifically with the fib, right? There is a zone in which is called your OTE or your optimal trading entry, right? We are looking for pullbacks specifically within this zone, right? Now, our fib level says the 618 to the 886, right? That's where we want our order block to be. Now, for your entry, specifically, you want that to be so your pending order, you want it to, well, technically speaking, the price is 0.62 and 0.79. But if you see our fib, it's 0.618, which if you round up is 0.62. And then 0.79 is 0.786, right? Um, the fib is just adjusted to more so pulling off the order block. Not everybody who trades like this enters off the order block. And again, I told you guys why we enter off the order block, because as beginner traders, it protects you the most risk wise. But essentially, your pending order um, can be all within this zone. Like strategy aside, your pending order can be all through here. Now, the 702 is highlighted for a reason. This is favored the most. Uh, Not to say like you're guaranteed to see a pullback at the 702, but like in just a series of, you know, let's say 10 times on an entry model, probably 8 times out of those 10 times it's coming to the 702. But yes, after you draw your fib, that's the 618 to the 786 is the range in which you can pull these trades. Now, a lot of times you'll see trades come up to this 618 and play off. The only thing that's dangerous about this 618 is let's say your pending order is so high up here. This is your stop loss. Well, essentially, if you're pulling up to 5 minute, this would be your stop loss. So you're just increasing your risk. And this trade is not that detrimental. But there are trades where these candles are much, much longer. It's been some entries that I've had like 92 pips, and that's from the 702. So you can add about 10 to 15 additional pips that you're risking between that 618 and that 702. It just depends on, um, how far price action pushed up or how far price pushed up kind of determines the length of these candles, which then determines the pip count for that candle, which then determines how much you're going to risk for that trade. But yes, now understanding that when we are looking at order blocks, there's going to be order blocks on every single time frame because there's structure on every single time frame. Let me just go ahead and pull up something a little bit more cleaner. Boom. Let's come back. Mm, that's not bad. Oh, this is cool. Right here. Close below. So we got the entries on the 5 minute. Sheesh. Mm-mm. So we got no entries here for the sell. Balaha, technically. High to the low. Oh shoot. I don't got my phone. Can somebody tell Meta we're live? I seen her pop up in the Telegram. Nah, there's no entries here. Oh, let's see. No, I don't like that. That's consolidation. Dang. Let's see. So, well, this low is higher than this, so we probably got something in here. Mm, no, bro. Pull back. Sheesh. The entries was grim. What week was this? Last week? The entries was grim. I might have to go back a little bit further. Because this has been, November has just been iffy. About all of this. Let's see. Let's go back to when structure was clean, man. Mm. Perfect. Perfect. Oh, man. No. Dang. I need to have a specific model to show you guys what I'm talking about. On a 15-minute approach to the upside. Well, technically, this will work. This order box, not the zone. Oh, man. This is rough. Mm, 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 mm. I'm just not seeing it. I could not find it. So basically, here's the thing about order blocks across time frames. Sometimes, who asked me this? Mike asked me a question, and he was asking about like liquidity. Like, let's say you have an entry and it blows through, like on a 5 minute, like it blows through the 5 minute stop loss. Sometimes it's not is it will blow past that stop loss, but it'll come to an order block, either on a higher time frame or it'll just come to a previous low order block. I'm trying to find an example that I can show y'all because this is a little specific. Because most of the time, of course, it just reacts off the order block and bounces. But specifically blowing through, I'm gonna have to look on a 15-minute first. Mm-mm. I mean, this is probably the closest example to what I can find. Now, in this scenario, it didn't blow through the previous low. Um, like in certain scenarios, you'll have it to where, like, if your stop loss is right here at the one, and when price pushes back down, it's coming to a previous low order block. That's what I'm trying to show. Um, I'm trying to. That's not a valid low. I'm gonna see if I can just show y'all something that would look like. This is the best way to explain it right here. So in this area, as you can see, this whole trend, we were in an uptrend, clearly going up. Now, here's the thing about entries. You have multiple, like each time you have a valid low, like so, like right here, two more candles, valid low, two candles, valid low, two candles, valid low. These last candles are all order blocks. Now, order blocks in themselves are powerful. They are usually, like, if you look on a higher time frame, and let's say like price is chasing something or pulling back towards something, right? It'll come to these order blocks first and reject off of them, right? If it pushes through, then second you would look for a liquidity sweep. So like right here, in this area right here where this red line is, where that stop loss is, I can almost guarantee you it came, touched this order block right here. I don't know if y'all, I wish I could show y'all this in real time. Okay, I'm glad I found the example. So right here, right? Price came, it touched this order block, rejected it, and then pushed down. Now, Aaron, how do you know this? It's because of where the candle closed. This candle closed right off this order block, meaning it rejected off this order block, but price swept down to liquidity as well. But what started this rejection was actually the order block and the liquidity sweep working together. So you had a candle close at the order block, push down for the sweep, then we see our rejection, the start of our rejection. Some traders target this specifically. They'll look for the order block and they'll see, is it close to this area where it could be a possible sweep? And once you have both, like once this candle closes, once you have this sweep motion and this candle closes at this order block, they'll catch this buy up. It's another method of people trading sweeps. I don't necessarily recommend it because you have to be very, very precise and tactical. However, this is just understanding the power of order blocks on multiple time frames, and then also understanding that order blocks will work pretty much on any time frame. Like just the simple concept that price will come, touch it, and reverse. You'll see this multiple times, right? So like right here, these lows got disrespected, right? So this order block got disrespected. Well, it did push up off this order block just a little bit, then it rejected it. Did the same thing here, came, touched this order block, pushed up a little bit, rejected, and this was this final order block that was respected out of this whole trend. We had a few lows in here, order blocks that slightly you got a rejection off of, but this was the order block in particular that caused this motion back to the upside. The reason why this is important to see is because when it comes to your entry, now that we drew the fib from the previous low to the newest high, we know that, okay, this was the order block that price rejected to continue the trend, because before that we were kind of playing around. right? Before we kind of was forming a liquidity sweep in a hole. But once we see that, okay, we have an order block that was respected and price came and rejected from, that'll give us additional confirmation. Okay, we're either in continuation or we can look for entries once we know that, all right, prices is now about to either create a new, understanding the trend, we're about to make a new high, whatever case may be. I'm looking for entry now. And if we see here, this order block was in the zone. Let's click down to the 5 minute to see what it looked like. Sheesh. Just missed that 702. But this was perfect. Fair value gap right on this 702. It was, let's see. Let's make sure my fib is right to the T. Yeah, no, I would have missed you. But again, this was perfect. Perfect. We found the order block that price rejected from to cause the continuation of the trend. Boom, even right here, understanding we just broke structure again to the upside because you're gonna have valid highs and valid lows all in here. But this order block, that's more so using market analysis in the totality, right? You figure out which order block was rejected, right? Let's say if it's blowing through lows, it's blowing through lows. It's like, okay, I understand my higher time frame is still bullish, so I just need to see what price is going to respect, right? So we see price respected this order block. Now, while it respected this order block, it also broke structure to the upside right here. Oh, let me draw something else for that to look a little bit more clear. Candle close below. The way that it has to be the bodies, right? Bodies of the candles for structure. So we have a candle close above this previous high. Cool. Price should now continue in the trend, looking for entries, right? That will help you not get caught up in messes like this, right? Now, this, you could easily get clapped up in a trade like this, right? Like, for example, if you drew it from this low, let's say you drew it from this low to this high, right? Let's say you was looking real time, you seen the valid low, you want to catch the trade in the uptrend. Well, this didn't even give you an entry, but it came to the 618. Technically, let's say if you was to enter off the 618, technically speaking, you're still good. However, when you see actions like this, and then, when you're just analyzing a chart, and let's say it's like, let's say we're bullish on a higher time frame, but you see it start taking out some lows, like some valid lows. Don't look at it as necessarily, oh, break a structure to the downside, especially if you're looking at a lower time frame, because all this is a pullback. I can already tell you now that this is either a pullback or consolidation, right? So when you see these breaker structures on these smaller time frames, don't take it as like, oh, it's time to get into the sale. Because remember, you're marking up your swing lows and your swing highs for a reason. But let's just see. Let's just see what it was. Let me clear this up. Does everybody see this? That was just a range within a range. The totality is that we were clearly in an uptrend. However, did we have structure break to the downside? Yes, but that was not the dominant trend. That's why when you're marking up your swing highs and your swing lows, you want to understand which part of the which part of the market do you want to be on. You want to be on the dominant trend, and the dominant trend, as we just saw, was that 1 hour. So that'll help you navigate areas like this. right? When you see a break of structure to the downside, don't take it as, oh, it's for sales, especially if you're on a lower time frame. Structure is going to break first on a lower time frame for anything. Like you're going to have when the chart is going like this, right, and you're pulling back, it's just going to look like this. Oh, shoot. Let me draw this better. Right. It's going to look like this. You're just going to have break of structures occur more frequently, right? But that doesn't mean that this is determining the trend, right? This is just a representation of this on a smaller scale. That is it. So if you had a situation where, again, you was in an uptrend, break structure to the downside, all this is, especially if you're bullish, well, no, if you're bullish, all this is just a pullback. Don't get caught up in this. If you was the person that you just so happen to enter right here, then one or two things. One, that's kind of on you, because you have to be aware that when you're entering and price already pushed up so far, you need to keep in mind a pullback is occurring. A pullback is going to come at some point. You don't want to enter for buys when price is so high, right? You understand that this push is going to die out soon, right? That's why the most efficient entries is down here, right? That first move of the break of structure that aligns with the higher time frame. And again, that's exactly what I just did today. It just did not let us in. And like, man, look to see what it did. Like, I already knew it's probably going to, yeah, it's probably going to clear this out. I only trade. I really only call out trades that I know for certain is gonna like super TP, like super TP. But again, that's why I marked up the first break of structure, right? Because again, think about what was happening. What is this? It's a pullback. What are we about to do? Make the new high. Let's go to our higher time frames to see. Pullback, higher high. Cool. So when I'm analyzing this, I'm understanding I need to catch the first move that aligns with the higher time frame. Is what it's saying. You can hold these trades. This is what I mean by you can hold these trades. Let's just say you was to get into that trade, pulled it off to 618, whatever. 147 pips. $1,000 on one contract. And I promise you this joint is probably just gonna go to the moon. But that is like breaking it down in the simplest way possible. You're just literally going on your higher time frames. Do not enter on them pullbacks. Don't even enter on a pullback. If you're in an uptrend, do not enter in the sale. Don't. That's basically all that means. If we're in an uptrend and structure breaks to the downside, don't enter into a sale, especially as beginners, because you guys want to be the most efficient. Somebody like me, I could enter into the sale, and it's not to be like, oh, I can do it, you can't do it. It's because I have an understanding that, all right, this is limited, right? I'm not going to hold a trade that's a sale. I'm going to be quick to go break even. It's like I guess they call it scalping. It's like the term for it. Much more cautious, smaller wins, yada yada yada. Okay, cool. I'll do that sometimes, but again, I've gotten to the point where I know it's more efficient. I know it's more efficient. Um, so again, trade the trend. All in all, trade the trend. Look for areas that that back what you want to do, right? If price breaks below, right, where is it coming to? Where did price come to? Right here. Just a random spot on the chart. Where did it touch? An order block. Touched this order block. Bounced off, right? Where did this touch? Order block. Last down candle before the up move. Bounced off. There's another thing about order blocks. There can be multiple. I didn't want to cover that in this video. Um, in your setups, and this was, I guess, the easiest one to see. Well, this one just had one order block. Let's see if we got one with multiple. I mean, technically speaking, I'm gonna find something more cleaner to show you guys. Actually, this was an entry. Because this ain't nothing but consolidation. Hold on. This definitely was an entry. So in this area, consolidation, there's no valid lows in this. We just got all of these are order blocks, by the way. This is an order block, this is an order block, this order block, this order block. It's just the last down candle before the up move. So this is a down candle, up move, down candle, up move, down candle, up move, down candle, up move. The thing is, these are not in our zone, right? However, these candles are. We got an order block in a zone specifically, right? Price came, touched this order block, bounced off. This order block is valid. Price did not push that far. And that is it. So in this model, right, this low to this high, we have 1, 2, 3, 4, 5, 6, 7, 8. We have 8 order blocks in here. Now, see if anybody was paying attention. How many of these 8 order blocks, how many are valid order blocks? I feel like you said something. I can't. No, it's not 3. The one I was right. It's not 1 either. Nope, it's not 4. What is your rules for your order block? How do you know if your order block is valid? Where does it have to lie in? Right. Boom. Bingo. There's 2 valid order blocks in here. If we highlight our zone, 618 to 886, we got this one that's valid, and this is valid. Now, what do you mean it's valid? Most of the candles outside the zone. It closed within the zone. The top half that supports what you want to do, which is the buy, this top half closed in the zone. Therefore, it is valid. So we have 2 valid order blocks in this zone. Now, price respected this one, our first one. Now, Aaron, why would it respect the first one? Well, it's close to our 702 and it's close to the fair value gap. I can tell you that, no brainer. And so again, I mean, this is what this move started 1050 to 240, but the retracement didn't happen until, I mean, really now, to be honest with you, when market opened at 6, that's when this move really took off. But yeah, no, this was there, and this is all valid. This is all just a pullback. And even in here, there's no new lows that was created in this whole push up. There's no 2 candles, all in this, right? If we had a 2 candle close, then we would have to draw a fib from that new 2 candle close. But there is no 2 candle close, meaning this is our whole range from here to here. Now, this to me looks like a, hold on. Dang, I
just gotta clear this out. Let me go back. Enough trivia. It's a swing point. This looks like a swing point. And our swing point and our valid structure goes hand in hand, right? We can clearly see a break to the upside. We got this. Oh, boom, 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 right? Our fib is basically aligning with our swing points. So this is like even, it makes it that much more powerful, if you will. And so, yeah, I expect it to take out this for sure. Oh man, they should have let us in. It should have came back and retraced a little bit further, man. That would have been golden. But let's see. Will it be another entry tonight? I mean, we just closed above, so that's a good thing. Get another pullback going, or try to catch it. We just broke the high, so. But I expect us to take this out though, this red line. But man, but yeah, I kind of lost my train of thought there. That's pretty much it. That is incorporating, your fair value gap, or not your fair value gap, your fib, understanding your fib, understanding your order blocks that's in the zone, understanding the fact that order blocks and liquidity sweeps are really, really powerful. Like usually that's where price is rejecting off from. And those rejections will continue to trend in one way, shape, or the other. That sweep will either continue to trend, or that order block is what is where price pulls back to, and it'll reject off of there. Once you guys, and I really hope that you guys are starting to see how important the basics is when it comes to this trade stuff. Like, I can show y'all a ton of different ways to trade, but I'm always going to refer back to the basics. Know your rules. Know your rules. Know that a valid order block has to lie between the 618 and the 886. Understand there could be multiple candles in that zone. Understand that structure is always going to make higher highs and higher lows, and it's defined by the higher highs, right? Understand that you're targeting breaker structure. Like, again, those first 5 boot camp videos, I mean, if you don't have a clear understanding of them, you should be watching them faithfully. Faithfully, because it's so important. And a lot of people get stuck on, like, they feel like they need more, but you really don't. Like, you really don't. Like, I'm tending to, like, you should be able to regurgitate to me everything about an entry before you're trying to learn something more advanced. Because that's what it's built off of. Your foundation has to be super strong. And Age, I'm glad that you said this, because I cannot explain this in no other way, shape, or form. Trading is full of aha moments. Like, it's full of, like, oh, that makes sense now. Like, it's no other way to explain it. Like, I am doing my best to break this down in the simplest way possible. But if I'm like 100% honest with you, it's gonna take time. And I'm telling you, learn the basics. Just keep watching the first 5 boot camp videos over and over and over, over and over and over, over and over and over. I'm telling you, when you watch those videos, you might pick up something that you didn't pick up the first time. The first time you heard it, it was new. So don't even think you learned from it if you just watched it one time. Like, if you just watched it and said, oh yeah, I watched all 5. Like, I'm like, nah, you better watch it again. Like, and again and again. Because I'm telling you, like, studying is a real thing. Like, I still to this day study. Still to this day. Like, if you really want to do what I do, you have to, like, you gotta study. You gotta be on the charts. You gotta be focused on the education, because I promise you it will click. but it took a lot of work. It took a lot of work to be in the position where I'm at, to just trade, like, and understand what I need to do. Like, I don't look at the charts during the day. I don't have to. I don't look at the charts in the morning. I know I'm gonna make money at night. Like, it's just, but it took a lot of, like, all right, what's going on? All right, what's going on? What am I not getting? And then after I started winning, then I started getting to a place where I had to learn how to protect my trades. Like, basically, I had to not gamble, because now somebody asked me the other day, they was like, Aaron, if you could if you traded every single day, um how much money would you make? And I showed them, I said, you know what? I actually did that myself. I made 15 bands in a week trading every single day. But do I trade every single day? I do not. I don't do it. Like, I've made a ton of money trading. Like, but it's I've understand like I just understand the more you're willing to make, the more you have to be willing to risk. I'm trying to tell you. How you make in trading, it has nothing to do. Trading is not financial whatsoever. It is how, like, literally, I heard this quote from Lil Baby, and I have never forgotten it since, bro. How you make 100 is how you make 1,000. How you make 1,000 is how you make 10,000. And I'm talking about with trading, that is nothing further from the truth. Wait, is that how you say it? It ain't nothing closer to whatever. You know what I'm trying to say? What I'm trying to say is basically that goes hand in hand with trading. Like, trading is all concepts. It's all it's the education behind it. Understand what's going on. Understand these order, like, understanding the basics, the foundation. It is so imperative. Because like I said, you guys are honestly one or two contracts away from making, I mean, $1,000 a day, $1,500 a day. All right, you have to understand that if I was to put on three contracts, like for this trade, right? This trade right here, right? If I was to put on three contracts and I rolled this trade all the way up, 174 pips, right? Let me get my calculator out. Because I'm telling you, like, how you make them bread is not, it's not hard. It's not rocket science. You just got to know what you're doing. What's that? 174 times 10 would be $1,740 times three. So 1734. Sheesh. So you're already looking at about 5 bands off this one trade if you just trade on three contracts. So think about that. Like, just think about that. Like, if somebody was to put their pin in order on the 618 and put on three contracts, they would be up 5 bands if they held this trade. So again, I'm telling y'all, the money is there. Don't be focused and hemmed up on it. Like, seriously, it is the education, the education, the education. Know what you're doing. The money will come, and you can obviously scale to that point. But yeah, enough of that. I say this is another good session. Let me hold on. Let me